and you're investing in Chinese companies to take their business out of China. How and why?
Yeah, so
I mean, this is a big market. Why do you need to go and look at some of these other locations? And if you're doing it, how are you doing it?
Right. So more and more Chinese entrepreneurs are thinking global from day one and looking to build platforms that are not just useful to China but also globally, and hoping that their business can start to diversify away from the Chinese market. It's certainly a result of the highly competitive nature of the market in China. Folks acknowledge that there are certain geographies where their technology is at a lower level of development and where markets are still relatively greenfield and where there's a lot of white space. And so we've identified a number of models that we think can be exported globally. We think that markets like Southeast Asia, India, MENA are particularly applicable for Chinese technologies because one, the kind of dynamic between government and private sector in those markets is actually more reflective of the Chinese dynamic than the US. Two, a lot of those markets seem to be at a similar stage in their technology evolution, adoption of technologies like China, so kind of a mobile-first basis as opposed to having to unlearn old consumption habits or wean themselves off of PC-based businesses. And third, Chinese business models, particularly these platform approaches where you start with a core product like messaging and then you build off of it to include restaurant bookings and tickets and ride sharing. That model works, and it's proven to build multi-billion-dollar companies in a very short period of time. And so that is a really attractive approach that now folks in those geographies are attempting as well.